JB Cycles here with an update on December the 15th. So this does not look very bearish to me, but still downside is likely for another 2 or 3 weeks. So you see my 4-week cycle in black here is still bearish. And if we go back one cycle, we see the previous cycle low was disrupted by the Thanksgiving holiday. But I think we should look at this black cycle and still think it should work. And it is pointing down into Christmas. And last week I drew this bearish red scenario, but I also think maybe we should look at something more bullish like this green scenario. So let me see. When zooming out, we have here the 3.5-year cycle in red, and I think we maybe should be looking for something like this. As you see, we have now left this very bullish part of the cycle, the green parts, and now we are in the topping phase, the yellow one, and normally we should see some kind of a topping formation in this part of the cycle, and then we start the downtrend sometime this winter or spring. I also have this where is it? Here it is, this 17-week cycle. So I have been speculating whether, is this, are we at the bull market top right now, or is it maybe in February, March? And I think more and more points to late February or early March. And looking at the wavelets for the S&P daily data, it does not look like we are following this very bearish red scenario here. I think we should maybe look for something more like this. Also, I have this primitive tool here, this rectangle of 26 trading days, and I'm placing it at this wavelet top, and it suggests we should watch out for downside for a little bit more than 2 weeks. So right now it doesn't look like we will get a very bearish reaction here, but a lot can happen in 2 or 3 weeks. But then on the other hand, we are at the very, very bullish second half of December. So we shouldn't expect something very bearish to happen here. And when looking at the VIX wavelet, so the wavelet, the red wavelet here is for VIX, and when inverting it and comparing with the S&P, we see the wavelet is pointing down, so the S&P should have a reaction down soon. And I have 2 projections given from VIX for the S&P. First I have this one, and as you see, this is trading days, and well, in general you see it points to a sideways or downward move for, let's see, how many days do we have here? Like this, that's about 2 or 3 weeks, yeah. And then I have this new projection, which is very, very similar, again pointing to a sideways or downward move. It could end already here in only well, around Christmas, but more likely going into early January. So expect something bearish for another 2 or 3 weeks. Yeah, again, well, that brings us to year end or early January. So it doesn't look too bearish in my opinion, what I'm seeing here. And then we have the hourly data for the Dow Jones Industrial. I drew this very rough red scenario a couple of weeks ago, and well, I'm a bit surprised how well this worked out, but yeah. Now you see we have the 2-week oscillation here in yellow, and actually that one is pointing to an oscillation low on, well, around Monday. So it looks like we are at the 2-week oscillation low, which means we should have some kind of a bounce. And I wonder if we have a Fed meeting coming up this week. That's normally on Wednesdays, so you know, if that's the case, we could see a rally or a bounce into the Fed decision. And well, this should be the A move of our ABC corrective move. So A and a bounce B into the Fed, and then a C down into New Year or something like that. Now that would look something like this. So I will keep this as my next rough projection. But you know, a lot can happen here. We could squeeze all the way back to the top, and maybe we could get a new selling setup for an ABC correction from that top. Well, right now it looks like we are in the middle of a corrective move, but yeah, I'll stick to that. So I guess that was it. Very short term, the next few days, it looks like the Dow Jones Industrial wants to bounce, but you know that the Dow Jones is not quite in sync with the S&P and tech. We could have, you know, S&P underperforming and the Dow Jones Industrial bouncing up. Well, I don't know. I can't really say, but in general, for the next 2 or 3 weeks, I would not be very bearish, and I would not like to be long. So, you know, stay in cash for the rest of this year, and then early January, start looking for a low, unless the world has gone under, but I don't think so. So, no crash coming here the next 2 or 3 weeks, and I guess we should look for a buying setup early January. And then a possible rally into February, March. Yeah. Well, you know, that outlook could change, but right now it doesn't look too bad. So, yeah. See you next time.